Hello guys, very good day to all. Today we will going to discuss our chapter, Basic Accounting Terms. Let's move to our chapter. In this chapter we will discuss some terms related to accounting. Our first term is business transactions. A business transaction is an economic activity of the business that changes its financial position. Means any monetary activity taken place in business. Let we look at the example. Purchase of goods of rupees 30,000. Purchase furniture for business of rupees 10,000. Salaries paid to employees, etc. Now we will discuss the characteristics of a business transaction. Our first characteristics is, it involves an economic activity. As social activities such as give old books for charity, etc., are not considered as transactions. And second is that it results in a change in the financial position of the firm. And transactions may be classified into two types. First one is economic activity between two business entity. Second is economic activity take place within one business entity, such as depreciation charged. I can give you a brief explanation of depreciation, as there is complete one chapter for depreciation. Depreciation is the decrease in the value of fixed assets due to use, wear and tear, etc. Our next term is events. Basically, events are the results of transaction. You can understand better by an example, such as purchase of goods of rupees 50,000 and sold the same goods for rupees 60,000. In this case, purchasing and selling are the transaction, but their result, that is rupees 10,000, that is profit, is our result. Let's move to next term. That is account. An account is a place where we record all business transactions relating to a particular person or item. Our next term is capital. Capital refers to the amount invested by the businessman to start his or her business, or even during the year, is known as capital. It can be in the form of cash, goods, or any assets. For example, Mr. Anil started his business with cash of rupees 1 lakh, goods of rupees 20,000 and furniture for rupees 10,000. So total capital is rupees 1,30,000. Our next term is drawing. No, it's not at all coloring or drawing a picture. It is an amount or goods withdrawn by the businessman for personal purpose. For example, Sunil took off rupees 10,000 from business to give his house rent. Next is liability. Liability refers to the amount which the firm owes to outsiders. For example, when a firm purchases goods on credit from Mrs. Bharat, then firm is liable to pay amount to Mrs. Bharat and she will become creditors. Creditor is separate term. You will learn this term in next part. Liabilities may be divided into internal liabilities and external liabilities. Internal liability is all the amount which a business has to pay to the owners is known as internal liabilities. For example, capital. Next is external liabilities. They are those liabilities which a firm has to pay to the outsiders. For example, creditors, outstanding expenses. Outstanding means due but not paid, etc. Liabilities may be further divided into long-term or non-current liabilities and current liabilities. Let's we discuss this one by one. First one is long-term or non-current liabilities. These are those liabilities which are not likely to be settled within one financial year. For example, long-term loans and debentures, etc. Second is current liabilities. These are those liabilities which are to be settled within one financial year. For example, creditors, short-term loans, etc. Next is assets. Assets means the property of a business enterprise. Assets are further divided into current assets or non-current assets. Current assets are those assets which are meant for sale or which is convertible into cash within a year and its give benefit for short item. It is also called active assets and short-lived assets. For example, debtors, cash in hand, etc. Non-current assets are those assets which is not convertible within a year. In other words, it will take more time to convert into cash and will give us benefits for a long time. These assets are not for resale purpose. For example, plant and machinery, land and building, furniture, etc. Non-current assets further divided into tangible and intangible assets. Tangible assets are those assets which we can see or touch. For example, land and building, etc. Intangible assets are those assets which we cannot touch or see. We can only feel. I am not talking about air, God, etc. Intangible assets examples are copyright, trademark, etc. Next term is receipts. It is the amount received by selling assets, goods and services. There are two types of receipts. First is revenue receipts and second is capital receipts. Revenue receipts are the income generated from the operating activities of the business. Capital receipt are the income generated from sale of fixed assets or investment. Ninth term is expenditure. It is a disbursement of cash or transfer of property, purchase of raw materials, etc. There are three types of expenditure. We discuss this one by one. First one is capital expenditure. Any expenditure which is incurred in obtaining or increasing the value of a fixed assets. For example, amount spent on the purchase of building, plant and machinery, etc. Capital expenditure is written in balance sheet. You will learn balance sheet in different chapter of your book. Second is revenue expenditure. Any expenditure whose full benefit is received during the accounting period. For example, cost of goods sold, salaries, etc. Revenue expenditure is written in trading, profit and loss account. Next one is deferred revenue expenditure. Any expenditure which is basically revenue in nature but whose benefit covers number of years. Basically 3 to 7 years. For example, advertising expenditure on the launch of new product in the market. Next one is expenses. Expense is the cost incurred in producing and selling goods and services. And today's last term is income. Income is the surplus of revenue over expenses. And revenue is the amount received from sale of goods. For example, the goods costing rupees 4 lakh are sold for rupees 5 lakh. The sale amounting to rupees 5 lakh is the revenue, the cost amounting to rupees 4 lakh is the expense, and the difference between the two, that is rupee 1 lakh, is income.